And now with the latest business and market news, it's over to Jayne Edwards.
Thanks, Alan. It was a day for the optimists on Wall Street on Friday, with investors sharply reversing 3 days of losses by flooding back to equities and lifting the indices by around 2% each. Investors chose to focus on a rebound in planned business spending and durable goods orders and overlook flat housing sales data to take the US market to its 4th straight week of gains. Gold also hit another record, breaking through $1,300 an ounce before settling just below that. The precious metal jumped by another 2% over the week, while oil also gained 2%. The movement was caused by the US Federal Reserve's statement on Tuesday, which indicated it's willing to do more quantitative easing to boost the economy. That's also led to weakness in the US dollar against many currencies, including the Australian dollar, which is at levels not seen since mid-2008. Looking at world markets, Friday's sharp rally saw the US and European markets up strongly over the week, while the Asian markets missed the benefits and lost ground. With more, here's Tom Elliott.
Well, as you just heard, both the Australian dollar and the gold price hit new highs during the week. Now, you would have expected the action in the gold price to have been pretty positive for a stock like Newcrest Mining, and this was the case early on in the week. However, on Friday afternoon, a lot of selling came into the market for Newcrest, and the explanation? Well, it turns out that Lihir shareholders, whose company has just been taken over by Newcrest, finally received their stock certificates and decided to sell down en masse. Telstra also was the recipient of selling, and at one stage its shares touched a record low of just $2.63, a fraction of their peak in late 1999. The reasons? Well, there's ongoing political uncertainty with the National Broadband Network, but also comments by the CEO that further job cuts were necessary in order to improve customer service probably didn't help. In takeover land, well, their FIRB approval was received for the Centennial coal bid. Of course, Centennial has received a bid by Banpu, which is a Thai company. That's gone through. The Centennial share price was stronger as a result. Everybody's expecting that the bid for AWB by Canadian concern Agrium will be the next one to receive FIRB approval. The board of retirement living operator Even reluctantly accepted the bid by Stockland at $1.80 per share. Now, this is below the company's stated NTA, but it's probably the best deal shareholders are going to get any time soon. And Healthscope shareholders, well, they overwhelmingly approved a private equity bid for their company during the week. Turning to Alinta Energy, and shareholders there can probably forgive them for feeling rather hard done by. They will get 10 cents a share in a reorganisation of the company's balance sheet. However, such is the debt load that the company is carrying that 10 cents a share is probably the best they'll get. The stock didn't even get up to that level because there are still financing and approvals waiting to be received. And finally, David Jones shareholders saw their shares fall during the week. The company released a pretty good profit result, but the outlook was pretty flat, and as a result, the sellers were out in force. Winner of the week is Cabcharge, up 11% after the ACCC decided to end its investigation into the company. Loser of the week is TPG Telecom, down 21% after the company's full-year results disappointed investors.